So you may have heard about a new 1% down conventional program, and that's what today's video is going to be all about. We're going to do a deep dive into the pros and the cons of how this program works and whether or not it's the right one for you. My name is John Ritter. I am the president and founder of Ritter Mortgage Group, and we love helping people make a move, whether you're a first-time home buyer, move-up buyer, downsizing, whatever the case may be. If you're looking to move in the next 9 days or 9 months, reach out to our information down below, and we'd love to help you on your next home purchase. With that said, let's jump right in. So, pros and cons of the 1% down loan program. Well, before we do that, let's take a moment to just consider some things first. The first thing is that the minimum credit score is a 620 FICO score. Now, even though it may say that in the program guidelines, the reality is you're probably not going to get approved unless you have a 640, maybe even a 660 score. It will go down to a 620, but you have to have what's called compensating factors. In other words, you need to be strong in other areas. Maybe you have a lot of assets, so you have plenty of money saved in the bank or in retirement, or you have a very low debt to income ratio. You need to be strong in another area to allow them to go down to a 620 score. So on paper 620, in reality it's maybe 660, maybe even 680. Another thing to consider is the income that's allowed for this program has to be equal to or less than 80% of the area median income. We're going to talk more about that in just a few minutes, but if you make too much money, this is one of those times where making too much money is not a good thing. So this is specifically designed for moderate to low income households. And then lastly, the other thing to consider is this is for a primary home purchase. You cannot use this program if you're trying to buy a second home at the beach or at the lake, or if you're trying to buy a rental property, only a primary residence. So why would you want to use this program? Well, the way that it works is you have 1% to put down and you get a 2% grant from the lender, and that grant is forgivable right at the time of closing. So that's an unusual option. A lot of banks with their grant programs, you either have to pay it back once you sell the property or if you refinance, or some make you pay it back monthly in the form of a monthly payment on top of your mortgage payment. So in this case, it's automatically forgiven. Another benefit to using this program is the PMI, or the mortgage insurance, is cheaper than what the standard should be. So you have a cheaper monthly payment. And then lastly, there's no geographic limitations. So there are some programs that are area specific. So maybe they're trying to revitalize a certain neighborhood or zip code or town, and the grants are tied to you purchasing a home in that area. Well, in this case, you can buy anywhere in the country as long as you meet the other requirements that we're going to talk about in just a moment. So how does this work? Well, you put up 1% of the down payment, and then the bank will put up 2%. Now, the reason why there's this 1 and 2 is because the program that they're attaching this to is a 3% down conventional program. So you come up with the 1%, the bank comes up with 2%, you put that together, you have 3% down. Now, here's the fine print. First is the maximum loan you can borrow with this program is $350,000. So I know some of you are thinking, well, gee, that's hard to find right now in this market. Yeah, for a lot of areas in the country, $350,000 is a drop in the bucket. But there are still some areas where $350,000 can get you a very nice home. And if that's the case for you, then this is a program that you can use. There's also no prepayment penalty. So you can choose to pay this loan off at any time, and there's no consequence to you. So if it makes sense, we're in a time period where interest rates are a little bit higher, and the expectation is that they're going to go down over the next 6 to 18 months. If they come down and it makes sense to refinance, you can do that. There's also no minimum buyer contributions. So there are some programs where as a buyer, in order to get that grant, you still have to come up with your own money. Now, you do have to come up with the 1%, but that doesn't have to be from your funds. It can be a gift from a family member that you use to come up with your 1%, but it doesn't have to be your own money, like some of those other programs where $500 has to be your own money or $1,000 has to be your own money. In this case, it doesn't matter Well, it does matter as to where you get it from, because the gift has to be from a family member, but it doesn't matter that it's coming from you. And then lastly, if you're a first-time home buyer, you'll have to complete a home buyer education class. If you've owned a home before, you don't have to. So that's an important point here. You do not have to be a first-time home buyer in order to use the program. You can be a repeat buyer. That is okay. So it's another interesting aspect to this program. So the next question is, well, how do I know, or how do I check to see if I make too much or if I make below the limit? Well, there's a website that Fannie Mae has published, and anyone can go to it. Just go to amilookuptool.fanniemae.com, and it's going to bring you to a home screen, what you see here. And then in this little search box that you see right at the top, you're going to input the address that you're looking at for the house that you have in mind. Or if you're not sure yet, just pick an address in that county, because it goes by the county median income. So once you type in your address, you hit the search button, that's going to bring up a result. So I went ahead and did an example here for Carroll County, Maryland. And in this search, we got to look at what the 80% median income is. And in this case, it's $97,760. So if I make equal to or less than $97,760, I am eligible for this program. It does vary by county, so make sure to look up this tool when you're on your own time. But in higher cost areas, that median income does go up, and in lower cost areas, that median number does go down. But take a look at where you're searching. If you're searching across several different counties, and you can see where it has a higher threshold that you might be able to qualify for this program. So one of the questions I often hear is, well, why is the bank giving away free money? Like, what's the catch? Well, there's really no catch. Lenders are encouraged by the federal government, and in fact they're required, to extend credit to low and moderate income households. There was a law that was passed called the Community Reinvestment Act back in 1977, and this program is not a direct correlation from that act, but banks are incentivized and encouraged to, hey, let's reinvest in the community, because homeownership is the key to stabilizing neighborhoods and towns. So this is one way for the bank to participate in that. Another question I get is, well, is it household income or is it just my income? And that is an important distinction, because there are some programs where it is the total household income. So anyone that is over 18 that lives in the house, all that income has to be considered in order to see if you qualify. In this case, the bank only counts the income for those who are on the actual loan application. So if you're married and you and your spouse are both working, but just one of your incomes is enough to qualify and support the mortgage payment, and that income is below the area median income limit, then you can use the program. The other neat thing about this program, they've written within the rules of this program, Fannie Mae and Freddie Mac wrote into the rules that you don't have to count all of your income. So you can exclude things like overtime, bonus, and commission. So if your base income is enough and you don't need your bonus income in order to qualify, then you don't have to count your bonus income, especially if your bonus income puts you over the limit. Just exclude that to keep you under the limit. Or you can kind of do a hodgepodge. So you take your base plus your overtime and your commission and exclude your bonus. Or maybe you take your commission and exclude your bonus. Whatever arrangement that works to, for the debt to income ratio, but keeps you under the limit is fine. You can also exclude other types of income. So if you're receiving alimony or child support, Social Security, pension, you do not have to disclose all of your income sources. Now, the one thing you can't do is if you have say a salary of $120,000 and you say, well, I'm going to write down $97,000 to fall under the limit. That they won't do. They're going to look at the total of that income source, income type, to see if you qualify. Another question I hear is, well, do I have to, the whole time that I have this mortgage, do I have to keep my income under the limit. No, you do not. The income limit only applies at the time you buy the house. So at that time, they're going to do an income evaluation, and if you're under the limit, you're good to go. After that, your income will never be evaluated again by the bank. It's just a one-time deal at the time that you buy the house, and that's it. Is this program always going to be available? Not necessarily. This program did roll out in May of 2023, and right now, currently, there have been no announcements, no published end dates, but the lender can decide that they've had this program out long enough and they're gonna roll it back. But currently, there's none of that on the horizon. But if this is something that is you're thinking about, I would go ahead and try to use it sooner than later so that you don't get caught without this program. Another frequent question, is seller credit allowed for closing costs? Yeah, you can certainly ask the seller to contribute towards your closing costs. The limit is up to 3% of the purchase price. So you can definitely do that. Whether or not it's wise to do that, right now we're in a seller's market. It's very competitive, and if you ask the seller to help towards your closing costs and there's another offer on the table that does not ask for seller help, chances are the seller might select that offer over yours because that's less money out of their pocket. But it is allowed. It certainly still does happen. You might have to be a little bit more patient. One thing you have to keep in mind though is you're allowed to ask for up to 3%, but it can't exceed the actual amount of the cost. So for example, I got on the screen here, let's say the closing costs are $7,500 and you successfully negotiated from the seller to cover $9,000. Well, you can't walk away from closing with a $1,500 check in your pocket. The most you can get is $7,500 and not the $9,000. So this actually would not be allowed. You could only get up to $7,500. So, question, can I refinance this loan? You absolutely can. This is not like other grant programs where if you go to refinance, you got to pay back the money. The money is forgiven right at closing. So theoretically, you could refinance the very next day. Wouldn't make sense to do that, but you could, and you would not have to worry about this grant. So you can refinance at any time. So let's kind of summarize here some of the pros. You get a 2% grant, automatically forgiven, so you're walking in the door to your new home with 3% equity right off the bat. It's based on your qualifying income. So again, the income that you want to use in order to stay under the income limit and still qualify. It has reduced PMI. And then there's also no geographic limitations on where you can buy a property. You can buy it anywhere as long as you stay under the threshold. Which brings us to some of the cons. And that first one is you can only borrow up to $350,000. So it does limit you from a price range perspective. Also, it is limiting from an incomes perspective. You can't make too much money. And so this is not going to be a very useful program in the higher priced areas. So if you know you live in a high priced area, just pretend this program doesn't even exist. All right, so let's finish out with an example. So if we have a $345,000 purchase price, you would be responsible for a down payment of $3,450, and then the bank is going to give you $6,900 towards your down payment. So that's a nice chunk of change. But remember, there are still closing costs that you have to think about. So you have your down payment, you have your closing costs, those two together. But if you can get 2/3 of your down payment out of the way, that's a great deal. So how do you get this loan program? Well, we offer this loan program in the 12 states that we're licensed in. If you happen to be outside of one of those 12 states, we can definitely refer you to some fellow lenders that we know that also have access to this program. Just reach out to us. We'd love to check and see if this is a program that's good for you. And basically, you got 3 steps. First step is to get pre-approved. And you can do that by going to our website at rittermortgage.com, click on apply now, and that will start you down the road to a pre-approval. It's totally free, there's no obligation. Once you're pre-approved, the next step is find a realtor. If you If you don't have a good realtor that you're aware of, we're happy to recommend a realtor in our network that we know does a great job for our clients and puts your needs above their needs. And then the last step is you shop for your home and you go to closing. So pros and cons of the 1% down program, if it's the right one for you, it can be a great program to use. Again, reach out. Our contact information is down below, and we look forward to catching you on the next one.